John, just a warning that might have to cut you off to go to the president, who is in Saudi Arabia, expected to speak any moment now. But first, tell us this news on Manchin. How critical was this federal spending for your business?
Well, it's unfortunate that Senator Manchin reportedly, decided not to move forward with something that's been under negotiation for quite a while. I suspect that it is not over and that there'll be something that will happen, whether it's under a tax extenders package by the end of the year, but something will happen here. But the critical point to make here with regards to Sunnova and a couple of my competitors is that the investment tax credit is still in place and is still in place for next year and is really even beyond that, although there's the step down post-2023. So this does not affect our growth plans at all for 22 for this year or for next year. And so it's something that when we're looking at the long term and we're really looking to see what the impact is, this would have lowered inflation. It would have lowered energy prices. It is going to hurt some people in the field in terms of the men and women that actually do the work in the field. Those wages are going to have to come down because those cash flows from the tax credits are not going to be there. That's where the impact is really going to be felt. The manufacturing jobs for solar modules, batteries are not going to come as fast and as plentiful here in the United States. So it's hurting the little guy. And it's not going to hurt the big companies like Sunnova near as much. And so we're really hoping that the Senate and the House and the president can really get something done here. But in the near term and even in the intermediate term, not as much of an impact at all, but certainly this will be good long-term energy policy. The other thing I want to point out is this doesn't necessarily hit just solar. This is about oil and gas, carbon sequestration, biofuels, hydrogen. So it hits some of these other sectors much harder than us, much harder than us. And so that's something that folks need to be aware of as well.
Just wanted to raise one thing you said there, which you said it will lower inflation, because I think reportedly one of Manchin's concerns right now, as everyone's concern is inflation. And, you can just hear the Republicans saying another spending package, throwing more money into this economy at a time where it's already overheated and Americans are dealing with rising costs of living. You say it's actually disinflationary? Explain that.
Absolutely. It's a place where you can lower energy prices. And really, it's probably one of the, if not the only place, one of the very few places you can, where you can bring energy costs, power for your home and power for your car, even now with electric vehicles, down in price. So you pull that subsidy out of the marketplace, that price is going to rise up, and therefore it's going to have a counter or an inflationary impact by not having the spend, by not having the investment there. So this is actually something that was very good for the working men and women in the country. So again, I think that's why Senator Manchin and others are going to come back and end up doing this. But at this point in time, really, make a point here about all of energy to follow on this inflationary impact is, if you love oil and gas stocks, and I know that a lot of people have these lately and looking for those prices of oil, natural gas, and coal to move up, then you love solar stocks because prices of oil, natural gas, and coal, which we compete with, have moved up materially. So this tax credit doesn't impact us near as much as people think it will do, and it needs to have an impact on the consumer to bring the price down for consumer because oil, natural gas, and coal have moved up so much.
I think people look at your stocks as a little more discretionary than oil and gas when it comes to consumer demand. John, what does it cost to install solar panels right now? And how has that price changed as a result of, you've felt the cost inflation too, and the supply shortage?
Yes. Well, so we have, on average, it's about $32,000 to install. We finance, and so the customer has as immediate savings about 20%, but that's also climbed. Even after we've raised prices about 15 to 20%, depending on the region across the country over the last few months. And so we are still getting savings. And in some cases, that savings can be quite significant, Sarah, as much as 50% savings. And so there's still a very powerful value incentive. And when we're selling in terms of energy and power, it's a necessity. Nobody goes home, even after you lose your job, and say, I'm not going to pay the power bill, I'm not going to pay the water bill. So this is absolutely something that's not discretionary. We're not seeing demand drop off at all. In fact, we had our biggest sales day in our company's history on June 30th at the end of the quarter there. And so we're seeing tremendous, not just ourselves, but the industry, tremendous demand for something that is a necessity. This is not a discretionary sale.